So how bad is this real estate market crash that we're in, and how much worse is it going to get? Interest rates keep rising. The amount of buyers keeps decreasing. Heck, if you were looking for a house for $600,000 a handful of months ago, that same monthly payment is affording you about $425,000. Let's take a deep dive into the numbers, find out what's really going on. Is it a good time to sell? Is it a good time to buy? My name's Alex Saldana. I'm a Denver real estate agent, investor, house flipper, and I've been working in the Denver market for over 10 years now. Okay, so what we're looking at here is Redfin's national information, which is actually a really great data center. And we can see this black line is 2022. So we can see over the last few weeks, we've had a small decline by about a few $1,000s from last month as far as price declines. Now in Denver, we line up with that, except we're a higher average price. So last month we were at about $560,000 for our average close price. And this month we're down to $548,000. So we're about $10,000 down over the last 30 days in the median close price. This is what's really fascinating is new listings. Going back to Redfin's national data, the black line here, we have less new listings to hit the market in the United States than we did last year, the year before, or the year before that. Now, why is that? The only thing I can think of is anybody who refied over the last 2 years when interest rates were in the 3s and even 2s for some of you that got really lucky, is that there's no incentive to move right now because your monthly payment on whatever you're going to buy is going to be so much drastically higher. It might be worth staying put. That's my only guess, because normally when prices start to drop, we see an increase of inventory, but that is not happening. Now, on a local level here in Denver, the amount of new listings, same story. We had 7,800 in September hit the market, and now we've got 6,100. You know, this is almost all-time low new listings to hit the market. Once again, the job market is really strong, so we don't have any distressed landlords just yet. Now, nationally, the amount of active listings has surpassed 2021. So nationally, we have 845,000 active listings on the market. So we're up about 7% year over year as far as active listings are concerned, but still not alarming. Now in Denver, our active listings have dropped. So we went from 14,100 active listings in September down to 12,200. That's more than a 10% drop in inventory over the last 30 days in the Denver market specifically. The amount of pending listings in the US, that's what's really driving most of the price action right now and whatever is going on with inventory. The pending sales are down because there's just not as big of a buyer pool. And then locally here in Denver, we're drawing the same story. So we had about 5,300 go under contract in the month of October, but compared to how many new listings we had hit the market, which was about 6,100, we had 5,300 go on the market. So net plus 800 listings in the Denver market, which is not anything that you're going to notice a difference of. You're not all of a sudden going to notice 5 houses on your street for sale, you know? Now, the closed sales, which line up with the amount of ones that have gone under contract, once again, the driver of what is going on with price, and we're losing closing. We are down 25% nationally year over year for the amount of homes sold. That is a big deal. However, until we see a massive spike in inventory, I just think it's going to be a slow trickle down, folks, until we're out of whatever we're in. Locally, we can see the same thing in Denver. You know, September, we had 6,600 closings. In October, we had 5,200. Median days on market nationally, you know, we're just matching now what happened in, what was that, 2020, which is about 34 days on market, which is still well below the national average over time. Locally, we can see we've had a big spike there, but we're Denver. We're insulated from most of the United States. We're a really attractive city to move to and live. Our job market is incredible. Our property taxes are really low. So we generally do not react as quickly as the rest of the country when there's any sort of correction to take place. So we're sitting at about 18 days on market on average. Month supply of inventory nationally, which the rule of thumb is a balanced market, is about 4 to 6 months worth of inventory. And in Denver, we actually saw the months of inventory decline. Let me repeat that. From September to October of 2022, we saw the months of inventory in Denver Metro decline from 2.1 months down to 1.9 months of inventory. It's just wild. Redfin doesn't have this data nationally, but the amount of showings per listings for the month was 5 showings per listing. So if you were on the market for all of October, on average, you got 5 showings. And now, how much further can this actually go? And you know, the real answer is that nobody knows. And I know you're tired of hearing that and you want me to take a stance on things of, nope, we're going to drop by another 50% in prices, or nope, we've actually hit the bottom. But if there's one thing I learned from a couple of my mentors, you cannot time the market. I do think there's a lot of money sitting on the sidelines. Now, it's turned into a ghost town when you go to sell your property. So you got to price it right, taking professional photos, taking listing videos, advertising it, for crying out loud, which agents just aren't used to doing. I mean, heck, we spend $1,500 to $2,500 per listing just on advertising, not even knowing if we're going to sell the damn property. But that's what you have to do to get as many eyeballs on the listing as humanly possible. Now, what might very well happen is, we saw investors pull back. We saw Opendoor they've taken some baths on some properties here in Denver. That's for sure. $150,000 losses. Zillow got out of the game. So big institutional buyers who were about 15% of the buyer pool are gone. They just disappeared, right? So how many sales are we down year over year? We're down about 20-25%. So naturally, from typical buyers, maybe we're only down 5 to 10% from your average buyer, and maybe we just lost all the big hedge fund corporate buyers. And if that's the case, it might be a good time to pick up a solid deal. We are seeing some lowball offers work, but I do think that so many people got such an aggressive interest rate that it's preventing them from taking a move. If you're at 2.5% interest rates, why not just turn that property into a rental if you can cash flow it all? Because the job market is still really strong right now. Heck, you can get a job in Denver pouring coffee for $20 an hour plus tips, right? So why would you sell your property? And that's always the first advice I give when anybody comes to me and says, hey, I want to sell my house. It is, are you sure you have to sell your house? Can we turn it into a rental for you? And if you're going to cash flow and the job market is strong and you're actually going to make money and you have the money for a down payment for whatever else you're going to buy, just hold on to the property because you may never see those interest rates again. And the other school of thought out there is that, we are going to have an additional 20 to 30% correction because heck, we're down almost 10% from April highs this year in 2022 already, but year over year, we're still up 12 to 13%. So if we see another 20 to 30% adjustment, maybe the bottom does fall out a little bit, but I think a whole lot of things are going to have to happen. I think the job market is going to have to just plummet. I think there's a big potential that we just kick the can down the road for another 5 to 10 years. But either way, even if we do have a big adjustment, home builders have already pulled back. So what's going to happen in 2 or 3 years when we start coming out of this dip? We're going to have less new homes on the market than there are today. We're going to have less resale houses out there because it was so hard to get in the first place, and prices might go bananas once more. And people always ask me, God, how bad can it get? Have you ever looked at Canada? Have you ever looked at Toronto's real estate? Because if you think San Francisco is bad, you think New York is bad, you think Denver is bad, we don't hold a candle to what Canada has for real estate prices. So when you want to know how bad it can get a whole lot worse. And don't forget, like and subscribe if you found this useful, helpful, informative, and you want more of this information to come to you. Until the next time, happy housing.